Good day once again, ladies and gentlemen. Welcome to the free live webinar hosted by your one and only Narko.MT. So the first chapter that we'll be covering in this webinar will be market structure. Okay. So starting off with the textbook examples with market structure, we'll start off with the bullish trend, whereby in a bullish trend, we have a series of highs, higher highs, and higher lows, meaning that we'll be expecting something like this here. Okay. So now, this will be the textbook example of our bullish trend, meaning that here we'll be having our higher lows, and here our higher highs. So now, one of the rules and properties of a bullish trend is that, okay, the rules of a bullish trend are, in a bullish trend, we are expecting to respect our, okay, made a mistake here. So in a bullish trend, we're looking forward to our higher lows to be respected and our higher highs to be violated. So meaning that in a bullish trend, our higher highs are weak and our higher lows are strong. Okay. So once we have something like this, we can consider this here as our break of structure. As our break of structure. Okay, now another thing that you should consider is that a break of structure is only valid that only when a break of the previous high broke with a candle close candlestick, meaning that there has to be a full candle close candlestick like this in order for us to consider it as a valid close. If it wicks just above our high or our low, that is going to be considered as a grab of liquidity. Okay. So now for our real market example, okay, so here we have USD CAD on the daily time frame, and as you can see here, USD CAD has been in a series of a higher highs and higher lows. Okay, let me just do this. USD CAD has been in a bullish trend, meaning that it's creating higher highs and respecting higher lows. Okay, so as you can see here, previously USD CAD has been in a bearish trend and it broke this lower high here, and now we're expecting a change in trend. Okay, so but then now we can see that here this is our higher low, and this here will be our higher high, and this here will be our higher low. Okay, so now let's see if here, this here was being closed with a candlestick body close. As you can see there, price didn't close above our previous high with a candlestick body close, meaning that this here will not be considered as our new higher high. So now our previous higher high, this here will still remain our previous higher high, and this here will still remain our previous higher low. Okay, so now meaning that here this is our strong low, and this here will be our weak high. This here will be our weak high. Okay, so as price continues to the upside, pushing to the upside, we can see that it creates this low here. Price eventually pushes to the downside and respecting our higher low here and pushes to the upside, and now we have a candlestick body close, as you can see here, and our new higher high will be here, and our new weak high, this here will be our new weak high, and this here will be our new strong low, our new strong low. Okay, as you can see, after our previous higher high was violated, price pushes to the downside and respects our previous higher low, and now this here will be considered as our new strong low. This here will be considered as our new strong low, as it broke our previous higher high here with a candlestick body close. So now this here is our new weak high. Okay, so now continuing with price, as you can see, after the previous high was violated, we had a pullback to the downside, and here we have a new higher low, and price pushes to the upside, creating and violating our previous higher high, creating a new higher high here. Creating a new higher high there, and this here we can consider as our weak high, and this here as our strong low. Okay, and moving onwards with our bullish trend here, we can see that price pull back to the downside, and when price pulls back to the downside, we're expecting it to respect this higher low here and push to the downside to violate our previous higher high here. Okay, so now as you can see, price here it's in the progress of creating a strong low, and it's also in the progress of violating our weak high here. Okay, why am I saying it's in the progress of creating a strong low? This here is not yet a strong low because it has not yet violated our previous higher high, which is here. Because price can just push to the downside push to the downside and violate our strong low here, and now it won't be a bullish trend. Okay, so and that's it for the bullish trend. Just a recap. So in a bullish trend, we're looking to create higher highs and respect our higher lows, create higher highs, respect our higher lows, and the properties state that okay guys, I'll just answer your questions when I'm done with the chapter. Okay, so just the recap is that in a bullish trend we're looking to respect our higher lows and violate our higher highs, respect our higher lows, violate our higher highs. And then a break of structure is only valid when it's when a candle and candle body stick break is only, wait guys, Narco, sorry for disturbing, but what time frame is this? Oh, this is the daily time frame. Okay. So guys, a break of structure is only valid when a candle body stick is closed above the previous higher high. Okay. So yeah. So I think we're done with the bearish trend, with the bullish trend here. Moving onwards to the bearish trend. Okay. Okay. So here we have US oil on the daily time frame. Let me just move to the 12-hour time frame. Okay. So before we start with the real market example, I'd like us to start with the textbook example. Okay. So for the bearish example, we're looking forward to for a structure like this, whereby okay, so we're looking forward to a structure like this, whereby price is creating lower lows and respecting our lower highs. Okay, so here price is creating our lower lows and respecting our lower highs. So in a bearish trend, our lower highs are found above our bearish trend, and our lower lows are found below our bearish trend. Okay, as simple as that. And the rules and properties of the rules of a bearish trend will be that in a bearish trend, price should violate our previous lower low and respect our previous lower high, and then onwards. Okay, so and for a break of structure to be valid, will price has to close with a candlestick body below our previous lower low. Okay, this here will be our bottom break of structure, and this here will be also our break of structures. Okay, as simple as that. So now this is the kind of structure we'll be looking forward in a bearish trend, whereby price is creating, is respecting our lower highs and violating our previous lower lows. Okay, so now moving onwards to our real market example. Okay, so here we have US oil on the 12-hour time frame. Okay, as you can see here, price has in a series Can you guys still hear me?
Yeah, we can hear you, Narko.
Okay.
Well, I can still hear you. I don't know about the other participants in the session.
Okay, as long as one of you guys can hear me. Okay. So here we have US oil on the 12-hour time frame. As you can see here, US oil has been in a beautiful bearish trend whereby it's creating our, it's respecting our lower highs and lower lows here, creating our lower low and respecting our lower highs and then onwards. Okay. Okay, let me just stop here. Okay, as you can see here, price created this lower high here. Price pushed to the downside to violate our previous lower low, and this here can be considered as a break of structure because price broke with a candle body stick and price pulled back to the upside, and price didn't violate our previous low, our previous lower high, meaning that it respected it and pushed to the downside to violate our previous lower low, and that they can be considered as a break of structure. Okay, and price push back to the upside respecting our lower high and pushing to the downside, violating our previous lower low. Okay, and price here, as you can see, price created this internal structure. Okay, so price created this here, broke our previous lower low, and so price violated our previous lower low, pushed to the upside, and then created this lower high here. Created this lower high here, and this lower high pushed price to the downside to create and violate our previous lower low, creating a break of structure. Okay, so and then onwards, price pushed to the upside, broke our previous lower high, meaning that now we could be in a change break-off trend, meaning that we could be moving from a bearish trend to a bullish trend. Okay, but then one thing you have to remember is that once price breaks your previous lower high, you are in an unconfirmed trend. So for you to be in a confirmed trend, you need to have 1, 2 or more. You need to have 2 or more lows. You need to have 2 or more highs in a bearish trend, or 2 or more lows in a bullish trend. Okay, so now here price is in a unconfirmed trend, but then once again price pushes to the downside and violates our previous lower low, meaning that now we still confirmed bearish on US oil. Okay, so this is a lower low, and here this is a lower low. Okay, so now price and then onwards breaks our previous lower low, creating a new lower low, a new lower low here, and a new lower high here, and this lower high pushes price to the downside to violate our previous lower low, creating a break of structure. Okay, so now the same thing happened again here. Price violates our previous lower high, but then price manages to push to the downside, meaning that now we in a we still confirmed bearish. And this here will be our lower low. And then so let me just finish up this trend. Okay, so price created this lower high here. Okay, price then onwards creates respects and creates this high here, this high here. So this high manages to violate our previous lower high here. So now we're currently ranging between this high and this low here. So what we'll be looking for is that we're looking for price to respect this high here and push to the downside so that it continues bearishly. So okay, so just a quick recap is that in a bearish trend, the properties and rules of a bearish trend is that we'll be looking for a structure like this whereby we are respecting our lower highs and creating our lower lows, and price will be looking for price to violate our previous lower high, our previous lower low, and respect our previous lower high. A break of structure is only valid in a bearish trend, whereby only if it's closed, a candle body is closed below our previous lower low. Okay, so yeah, and that's it for our bearish trend and our chapter 1. Okay. So do you guys have any questions?
Now I have a question.
Yes, King.
Can I ask?
Yeah, you can ask, King.
Okay, so you said if price fails to break maybe a high or a low in a downtrend or in an uptrend, we have an unconfirmed trend. So when we have an unconfirmed trend on lower time frames, is it possible to find increase on whether price is still going to the downside or to the upside.
Yeah, thing is, on the lower time frame, you can be confirmed. Like for instance, here when price broke our previous lower high here, on the lower time frame
Yes.
within this structure here, you can see that we are confirmed bearish. So within this structure here,
Yes,
you can find trades. But then when you're looking for trades based on this internal structure here, it must be confluenced by your higher time frame.
So if the higher time frame doesn't align with the lower time frame, I shouldn't take any trades at all in order to avoid losses.
Yeah.
Makes sense. Thank you.
No problem. Okay, any other questions? Okay, so that's the end of chapter 1. So I'll now stop the session and send another link in the group for chapter 2.